So there was one day that, I was rushing to put the kids to bed and I was really irritated with them because I needed to get back on my computer and finish a presentation for my boss. And I realized, wow, like my priorities are super, super way off. And I was so stressed out. I broke down. I was crying on the stairs. And I said to my husband, I don't know how we're going to do it, but we need to create a situation where I am not working for someone.
Hey, welcome to today's episode of Pivot to Profit. Our amazing guest today is one of the smartest people that I know, and she is the best Mohawk that you will ever see. My dear friend, Sarah Sullivan. What's up, girl?
Hey, thanks for having me. Hello, everyone. And I don't have my Mohawk in full effect right now. Wish I did.
Oh, man. Well, I think your profile does. So anyone that sees the image of the podcast will see your amazing Mohawk. So let me officially introduce how amazing you are. Sarah is a second-generation investor and founder of Sugo Capital, where she helps everyday investors build wealth through passive real estate opportunities. With a background in business, analytics, and cybersecurity, Sarah has a knack for spotting high-return deals before they go mainstream. Under her leadership, Sugo Capital has acquired over, I'm going to say this slowly, 150 million in assets, delivering an average investor return of 21% at exit. She's also the force behind the Confident Investor educational series, which has empowered more than 30,000 people to invest with confidence. She's also married and has two young daughters, and she and her husband have the craziest hobbies like aerial acrobatics, which means literally she goes to like circus school. It's crazy.
Well, that was quite an introduction. Thank you, Pam.
Absolutely. So let's dive in. So your intro said that you're second generation investor, and I am lucky enough to know you in person and have met your parents. But what did little Sarah want to be when you grew up? Like, what was the dream?
So this is really funny. I wanted to be a secretary. Like I would get papers from around the house and I would organize them on my desk and have like really neat pen holders and like pretend fake nails. And I wanted to be a secretary. So
I love that. Look, secretaries get things done. Let's be really clear.
Yeah, I think that's it. I love like making lists and then crossing off what I'd done on that list, even though they were things like gather pens around the house or whatever it was.
I love it. So as a kid, what were you taught about money? Was money good? Was money bad? How does all that work?
Oh, yeah, money. You got to be really careful with money. It's definitely what I was taught. So it wasn't that we didn't have money. It was just that money, there was a limited amount of money. So there was not an abundance mindset. Sorry, Mom, if you're listening. But it was more of a scarcity mindset of like, do whatever you can yourself. Don't pay for anyone to do what you can do yourself. So like never have a house cleaner or a gardener, or don't employ people if it's something you can just, work longer and do yourself. And so that was one of the biggest things I had to overcome being a business owner, because I can do everything myself, but I'll only get so far.
Yeah.
And yeah, I can clean my house and do my garden, but then I'm working, of course, we all have to learn how to delegate in order to grow more and have team and empower a team to grow more. So that was one of the biggest things that I had to overcome as an entrepreneur. And my mom and I even talked about it years ago. She was like, wow, you're like the opposite of me, the opposite of what I taught you about money, and what her parents taught her about money was, keep as much of it as you can. Don't pay to do things that you could do yourself. Be very frugal. And so I am very frugal in my business. I'm very careful about my expenses and that sort of thing, which has contributed to a really strong EBITDA. But also it was something I had to overcome in order to grow. Yeah.
And now living in California, the most expensive place on earth, we do have house cleaners and landscapers and people who are making your life easier. And it's totally magical.
Yes. And I did have someone I worked with for about 2 years around mindset in the beginning of when I was creating Sugo Capital, around mindset, around money and abundance and all of that. And I mean, we were working on other things together, so it was a very holistic mindset coach. But that was one of the big things, was abundance mindset around money. If you have a scarcity mindset, it will be scarce.
Yeah. Which is amazing, because now the people you work with have abundance and you help them bring more abundance. So before we dive into Sugo Capital, you did not start in the fundraising. You were in software and all that. So tell us a little bit about your journey of how you got here.
Yes, it was very indirect and not purposeful, which I know a lot of people don't like to hear. They like to hear like, I had a dream and I had a goal and I went for it, but it was a really like kind of a snaky, squiggly path. And it wasn't intentional. The how wasn't intentional, but the end goal was intentional. So, yep. So I have an MBA in finance and marketing, and I worked at tech companies. I did large enterprise software implementations at places like UC San Francisco, medical school, dental school, these sort of things. Worked in tech startups in Silicon Valley. And then when I had my children, I realized, oh my goodness, my day is like slammed. I have zero time to even think or breathe, much less pay attention to my children. What's the point of having children if you see them for like an hour a day? And I was the mom that was the first drop off and the last pickup, and the daycare workers out there with your two kids on the corner, like, lady, we closed 5 minutes ago. You're really late again. And so there was one day that, I was rushing to put the kids to bed and I was really irritated with them. And because I needed to get back on my computer and finish a presentation for my boss. And I realized, wow, like my priorities are super, super way off. And I was so stressed out. I broke down. I was crying on the stairs. And I said to my husband, I don't know how we're going to do it, but we need to create a situation where I am not working for someone. We need to create a situation where I have flexibility so I can be with the children, so we can, also like with kids, they have all these days off school and I couldn't take days off of work. And so I said, okay, I need a situation where I can take days off to be with the kids during holiday breaks and summer. And so I said, I don't know what that looks like. I don't know how we're going to get there, but we sat down that night and we wrote a goal on a piece of paper, and it had a date and a number. And I said, I need this much passive income or alternative income in order to quit my job, and I need it by this date. And so we wrote it down. We're like, we have no idea how we're going to do it. But once you set that goal and your mind is focused on the goal, then I started seeing all these opportunities and ways that I could do that. And so I didn't say, oh, I'm going to raise capital and be a fund manager, but I started being open to, when I saw other people who were hanging out at home during the day, like, what are you doing that you're not going to work every day? Or, you get all those Facebook pop-up ads about different kinds of companies you can start and coaching programs you can do. And so I started looking at all of those because I was like, oh, if I do these things, I don't have to go to work and have a job. I can work for myself and have more flexibility. So it just, that night when we wrote down the goal, we had no idea how we were going to get there, but it opened both of our minds to looking for how we were going to get there. And so we started out by investing in real estate on our own, and we got super burned and still a lot of money, but I didn't stop. I was like, okay, that type of investing was not right for us. Is there something else? And then, so we started buying commercial buildings, apartment complexes with other people who had already done it. So we partnered with people, and I really suggest that to anyone who's starting a company. You don't have to partner with someone forever, but starting out, it's so hard to get momentum in anything. So finding someone who already has a track record or momentum in what you're trying to do, partnering with them at least for a year or two. And then if you want to go off on your own, cool. If it's working out great and you stay partners and grow together, cool. But that was really a game changer for us, is when we started partnering with people. And so we were buying multifamily. And then I realized what I really loved was the investor relations side. And long story short, now it's 6 years later, almost exactly, actually, September 2019 was when we started.
Amazing. Congrats.
Yeah, thank you. And so now that's all we do. We don't operate any of our, we do our legacy investments. We still own some. But now going forward, we raise capital and we deploy it out to other operators. So now we have multiple funds, real estate, oil and gas. We also learned, if you're really tied to, if you're a one-trick pony, you get stuck. And so we branched out as fund managers, and depending on what's going on in the economy, we can pivot and place funds in oil and gas. We can place funds in cash flow businesses, in different kinds of real estate, in debt opportunities. So we're really flexible now, and it was all born out. All the pivots that happened were just because it was like, well, what we're doing is less profitable now, so let's pivot and see what else can be more profitable. No pun intended on pivot.
I love it.
But we pivoted a lot. And even, at the beginning of this year, we launched a new structure for our funds. And that was a pivot. And it was born out of listening to myself, like, what do I love doing in my business and what do I not like doing and what am I not good at? So release what I'm not good at, keep what I'm really good at, what lights me up. And then also listening to our investors. We have 450 active investors right now. And we're always listening, having open Q&A, open Ask Me Anything sessions with them once a week. So I get a ton of feedback, and then I can pivot based on what our clients want, what they need, what's going on in the economy. So so that's my story, soup to nuts.
I love it. That's a great journey. And what I love is because as an entrepreneur, it's never easy and it's never direct path from point A to point B. It's not, I went to college to be X and 20 years later, I'm now excelling at it. Like I've done lots of these interviews and no one had a straight line. Everyone had the bumps and bruises along the way. Yeah. So when you first started Sugo Capital and you were like, rip the Band-Aid, I'm going to be out on my own. Tell me about a time where early on you felt like, oh, this is going to work. I can do this.
It was when we got I think it was our third acquisition check from closing. And that one check was equal to my entire year salary at my job. And so I went, okay, so really I only have to do one closing per year in commercial real estate to equal an entire year of working 9 to 5 with 2 weeks of vacation and all that, commuting and all that kind of stuff. And so I was like, wow, okay. If I did it once, I can do it again. It took a few times to get to that level, to get to that size of closing. But once I did, it was like, okay, I did it once, I can for sure do it again. And so it was, I think the next week or maybe that next Monday that I told my boss, I gave him my 2 weeks notice. And he was like, are you sure? Did you do the math? Like if you have a good thing going here, Sarah. And I was like, I know, it is. It's a nice salary for sure. A good package all around, but I did the math.
Yeah.
Yeah.
And I just made the same amount in a check last week. So peace out.
Yeah.
I love it.
Yeah. It was about 6 months later, he texted me a picture of my car. So I had a green Lamborghini and the license plate said Sugo Cap. And that's, the name of our company. So he happened to be at the grocery store that I was parked at. And he took a picture of the car and he's like, are you at the grocery store right now? And I was like, yep, math worked out.
Also, side note, I've been in a number of Lambos. They do not have much room for groceries.
No, it was just a quick pickup of a few things.
A week's worth of groceries do not fit in any Lambo that I've ever driven. McLaren's, none of those. Aston Martin, the DBX does have room for groceries, but beyond that. So amazing. So now you're a fund manager and your role is to connect investors, people with money, with opportunities. Yes. Tell us about the type of investors, because I'm sure there's part of our community that are going to exit one day and they will have liquid cash. So tell us about the investors that you connect with and what they look like, what they smell like, all of that.
Well, I only meet them on Zoom, so I don't know their smell, but I know what they look like. So we have a lot of investors who are business owners today, and they're starting to stack their investments now so that when they exit, they have income replacement, or they at least know what all the different types of alternative assets look like, so that when they do exit, they're not like, oh, I've got millions of dollars and now I'm going to try to figure out and learn a bunch of stuff this year. That is way too stressful. So what they're doing is they're learning about different asset classes today. And so what we do is we start with what their goals are. So some people, they're not exiting their business. And so they have goals of maybe wealth building. And those that are planning to exit their business or quit their W-2 job in 5 years, they're like, I need to stack passive income. So we look at, there's 3 main goals in investing. Either you want passive income, like monthly checks, quarterly checks, because you're going to live on it, or you're investing for tax reasons. And we have a lot of investments that give you 75 to 100% write down on your AGI. As far as like you invest 100K, you take 100K off of your AGI. So that's super powerful for business owners and those that are having big exits and they need to, reduce their capital gains tax for their exits, whether it's real estate or business. And then the third reason people invest is for wealth building, for growth, long-term growth. And so the first step is I talk with investors and I say, which of these are your goals? And some people say all three. And I'm like, well, let's get a little more specific. And so we get really specific about, okay, you want, this much passive income per month by this date. Okay, then we're going to direct you to investments that have passive income and in the form of monthly checks and quarterly checks. And those might not have the biggest overall return, but they might have the largest return that you can live on a consistent basis. So it might be a debt vehicle. Other people who are looking for wealth building for the future, oftentimes they go into real estate. From our pool of offerings, real estate, it's not cash flowing a huge amount today, but they're appreciating and we exit 3, 4, 5 years later. And often investors are seeing 20, 25% annualized return. So, roughly doubling their money in 5 years. And so if that's, someone's goal is wealth building for the future, I've got a lot of income right now, I just need to put it somewhere for the future, then we roll them into something that's more on the appreciation side of things. And so we have a little bit, those are the 3 categories that we really pick our investments to solve those problems for investors. And
talk about oil and gas, because that's a big one for taxes. So help like a business owner who's looking at a big tax bill, but they have some cash. Oil and gas is a great strategy. We use it with many of our clients.
Yes.
Help us, educate us, act like we know nothing.
Okay. So the government rewards you for investing in things that they want you to invest in, and they want you to drill for oil. And so if you invest in a fund or an operator who's drilling for oil, the government says, thank you very much. You can deduct this from your taxable income in the year you make the investment. So as an investor, you're passive. You don't have to do any of the work. You write a check, you give it to an operator. They pool it together with a bunch of people's money and they go drill some wells for you. And then what they do at the end of the year, so at the end of 2025, you would get a K1 for the 2025 calendar year, and you'd get it roughly around April. And in section L of your K1, it will have a negative amount on the income line. And so it doesn't mean that you actually got negative income, but it's the deduction that the government allows you to take. And so we have a whole worksheet on it. And I wish I had I think it's sugocapital.com/resources. Takes you to the page that has a worksheet on this. So you can calculate, share it with your CPA, whoever does your taxes, how it would work for you. But basically, say you have an exit and you have, $1 million, you place it into an oil and gas fund. You can typically write down your AGI for that year. So if it was in 2025, you could write down your top line taxable income by $750,000 to $1 million.
That's huge.
Yeah, that's huge.
So, that does not happen in most tax strategies. There's only a few that you can actually dollar for dollar make that.
Yes. And my CPA always says, don't let the tax tail wag the investment dog or something like that. But basically saying, sure, that's great. But side note, drilling for oil is risky. So, the target returns are going to be, maybe you're going to 2-3x your money in the next 5 years, or maybe you'll lose all your money. There's really a wide range. And if you start doing research on oil and gas, you'll hear a lot of complaints, because it's really, the projections are like, we have a lease on some land and we're going to go drill. So it's not like buying an apartment building that already has people sitting in it and they're going to pay you rent every month. Right. So it's much less predictable. The amount of money you get every month is not predictable. Production goes up and down all throughout the life of the hold. Gas prices, they fluctuate 75, 45, 65. So that affects your distributions every month. It affects your exit price. So it is great for tax strategy, and it's less predictable for how much you're going to make on your actual investment. A lot of our investors are like, you know what? I'm pretty happy if I get that tax benefit. Yeah. And then if I get 10% a year on top of that great tax benefit, I'm good. That's better than, investing in something else.
Or giving that money to the IRS.
Yeah, exactly. A note too is that everything at Sugo Capital that we do, and I'm going to expand into private investments, they're not liquid. So that's often something people need to get used to. If you're used to investing in stocks, or you're buying your own real estate, those things you can buy and sell according to whenever you feel like it. But when you get into oil and gas and real estate funds, the manager of the fund and the operator is going to mandate when the exit is. And so they'll give you an estimate, but you have no influence over it. And so that's one of the big things people need to get used to. And a lot of times entrepreneurs where they're like, I'm in control of everything. It's like, well, in this case, you'll be in control of nothing. And some people are like, great, perfect. I don't want to worry about it. You take all the responsibility, and others are like, ooh, that's really uncomfortable. So I want to throw that out there too for people to know.
No, and that's a great point, because if you as an entrepreneur have cash and want to go out and invest, do the research, find the deal, and, you know, buy the property, fix and flip it, short-term rental, long-term rental, whatever. Okay, but then if someone needs a light bulb change, they're calling you. And that's where doing these real estate syndications, where we're pooling my money, Sarah's money, 10 other people's investors' money, all of a sudden we go buy, I don't know, a $200 apartment complex in Texas somewhere. No one's calling any of us that there's a light bulb out or that someone is late on rent. But in 5 years, we all walk away with a nice check, give each other high fives, and go do it again.
Exactly. And also, I often tell entrepreneurs, okay, so maybe you can get a higher ROI on your money if you manage your investment yourself in real estate. But think about how much time and what's your ROI on your time. So say you take an extra 10 hours per month to find property, buy property, manage property, do the loan, all that kind of stuff. What if you spend an extra 10 hours in your business? Wouldn't you actually make a lot more money? Even just like 2 to 5 more hours in your business per month, you probably make a lot more money than the amount of time you're spending on your investments. And I think about that all the time for myself, is when I'm thinking about doing something, I'm like, oh, like the hot tub water needs changing. Okay, so if I pay someone $350 to do that, it's probably going to take me like 5 hours, like an entire day. How am I going to change the hot tub water? I don't know. And how much money if I spent those 5 hours calling investors instead? It would be way more than $350. So, and we all know that. And so I just remind entrepreneurs that when they're talking about being hands-on for their investments, and I say, what's the ROI on your time? And what if you instead spent that time on your business, earning more active income, and then rolling that into more passive income?
Because your time has a value. And if you're an entrepreneur, it's a high value. And so just similar to Sarah, how you were saying the mindset growing up is like, if you can just do it yourself. Well, no, not if that's a $20 an hour task. If that's a $100 an hour task and my time's worth $1,000, I'm not doing it.
Exactly.
If something needs to be fixed around the house, a plumber's expensive, but my time is more valuable. So I'm going to call a plumber.
Exactly.
Right? Like, I'm not trying to figure out how to do those things myself. And if you're an entrepreneur and you're at a point where your time is valuable, your business is growing and you have cash and you're wanting to have it go make more money and work for you, that's where someone like Sugo Capital is really helpful, because she'll deploy the funds and you don't have to vet the deals. You don't have to change the light bulbs and deal with late tenants. Or do they find oil or not find oil this week? That's the fund manager's challenge, and not, or the operator's challenge.
It is the challenge, and like going out to visit the oil fields, it's much harder than visiting an apartment complex, because it's like way out there, and but it's fun. It's interesting.
I love it. So what's on the horizon for you? You've had lots of pivots. I've known you for years. Lots of different focus, but always bringing returns. Like what's next for you?
Yeah, so we're getting more into the private equity space. And so what that looks like is finding cash flowing businesses or entrepreneurs who are looking to scale, who already have a great track record of running companies or running their companies, and putting money towards that. So it's not like a VC where you're hoping for a 40x return, but it's very speculative. It's pre-revenue. We don't go into that space. But the space that's, okay, this group has shown that, their ROAS is strong. And if we put in some more money on advertising, we're going to, 2x it every time, or whatever it is. So it's more investing in businesses is what we're branching out to starting this month. And it's been a long time coming. It's something you and I even talked about this. We've talked
about this for a while.
Yeah, it's for a while. And so finding operators who, in kind of a special niches folks who run franchises and then funding those. So oftentimes you can see like a 3 or 4x on return on your money, whereas real estate in the same amount of time, you might 2x your money. So some people see it as more risky, some people see it as less risky, and it's all up to people and the operator, which is this, it's the same story for every investment, up to the people involved. But yeah, it's really exciting for a couple of reasons. One is I consider it a bit more predictable, depending, making sure the companies that you choose are good according to what's going on in the economy and what we project the economy is going to do over the next 5 years. But also, if someone's been able to do it for the last 5-10 years, it's likely that they can do it over the next several years with additional money. So
I love it. I love it. What is one piece of financial advice that you wish you had early on as being an entrepreneur?
I think it's around the partnering. So, and being really, really picky about your partners. And so in the beginning, like I said, we tried for 9 months or 12 months, my husband and I, on our own to launch Sugo Capital, and we got nowhere. And then we partnered with someone who'd already been doing it, and we were able to scale quite quickly. And so I wish I had just partnered right away instead of spending all that time for that year trying to do stuff on my own and not getting anywhere. But I guess that was a good lesson for me to learn. But yeah, really partnering and partnering with the right people and really vetting them very well as far as their morals, because you can have whatever you want on paper, but people can always get around it. And so making sure that your morals, your values, and your goals are completely aligned with your partner's morals, values, and goals. Yeah.
Huge, amazing advice. I love it. Sarah, thank you so much for sharing your story with us. Where can people connect with you?
If you go to sugocapital.com, that's my website, and you can opt into our newsletter on that homepage. There's also a ton of resources. So if you do sugocapital.com/resources, you can see everything that we talked about. There's all kinds of ROI calculators on our website. So if you're like, I really want to just peek into what do the returns look like? What does the passive income look like? What does the appreciation look like? What does the tax advantage look like? We have calculators for investors to use on all of that, resources for you to give to your CPA so they can help you with tax strategy based on our stuff. And then a whole bunch of resources around terminology. So if you didn't understand half of what I said in the resource center, you're not alone. That's why we have a resource center that says, what all these things mean in little bite-sized snippets.
I love it. Amazing, amazing. Sarah, thank you so much. Honored to have you on the show. Listeners, thank you so much for being here. Make sure you like, subscribe, and remember that it's not what you make that matters. It's what you keep.
Love it. Good meeting you all.
Thanks.